Well, welcome back, and let's have a look at some of the other shares because we are flooded with international shares. Let's have a look at United Steel, which of course a American company as well, and it can easily show us what everybody's thinking about that. Let's have a look here, and well, can you believe it? Beautiful chart, and of course this is a weekly chart. And Susanne is asking about this, and the reason why she's asking about it, she just dropped us an email and said, "Listen, we want to buy something in the steel area, and especially in America, because they believe that Mr. Biden is going to pump infrastructure and he's going to fix the country, and that's why they're looking at steel, United Steel." Now, if we look at this chart here, beautiful chart here, Susanne, it is all the way down, and it's giving us a beautiful turnaround bottom, almost like you say a U shape here, right at the bottom. It's a nice formation. And what do we see here? We see constant higher highs and higher lows, and that's always a good sign for a share for the medium to the long term. And what I like about it, the only problem is it rallied quite a lot in the last couple of weeks, but it's also a lamp pole formation. There you are. You can see it's a steep rally. I mean, the gradient is much more than 45. I prefer 30. This is almost a 60% gradient, so it's a steep rally. I mean, I will not chase it. I'll wait for a nice pullback, maybe to this level. And the reason why I say that level is because of these markets rallied way above itself. And let's have a look here. Here you are. And I will wait for it to come back, Susan, to about 1644. And I'll rather buy it there. And the reason why I'm saying that is, if you look at the S&P 500, I mean, I'm not a fundamental analyst, but a friend of mine just said to me, "Can you believe it that the S&P is trading at a price to earnings ratio of 37? I mean, that's expensive. It doesn't matter. People chase the market, and I will wait for this level to come back. I showed it there, and I will then use a stop loss of $14 to protect my capital. And of course, if you are a momentum trader, then you need to wait for it to take out this high, and that high will be at 2270. It will give us the next move to the upside, and it can then go to 2436, and can you believe it, even back to 2510. And maybe some people are interested in some steel companies because they say China is starting to struggle to produce steel, and maybe people will then look at the United States for steel. Let's have a look at Food Locker. And Maxine asked about Food Locker, and she wants to know what she wants to do there. What can she do there technically? Let's have a look at the chart. Almost the same as all the other retailers. Beautiful higher lows. In actual fact, I just looked this morning for somebody at the Fushini group, and the chart looks stunning. It's almost the exact copy of this one. There you are, Foot Locker. You can see there's the momentum. It's purely to the upside. Nothing wrong with it. I mean, every time that it comes to this support line, there you can see it just bounces off it. Let's start. The starting point was 1720. It rallied all the way beautiful up to 33, and then back to 27, then up to 35, then back to around 35, and then back to 46. But can you see these gains? Every time that it comes, let's say from 17, it goes to 32. That's almost 100% gain in a matter of a few weeks. Then it comes back, let's call it to 28, and it rallies to 35. That's another 20%. So it tells you these shares, if they start to get going, they're going with a vengeance. So most of the investors, I saw a video the other day of somebody that just said, the only thing he does nowadays, he waits for a share to drop, and the moment the share starts to rise, he just buys it, and he makes a lot of money. He doesn't understand why he must work. He can just buy shares, use it to rally, and the moment it's stoppish, he just takes his few percent, and he's making a living out of that. Well, I then just shake my head, and I said, well, can that be true? Because I'm struggling to make ends meet. And what's nice about it, all the guys know that I love the Aussie. For the last couple of weeks, I do a 50-point trade and a 30 and a 40-point trade, tiny trades to make a living. And this guy is just telling you buy the share, you wait for it to rally, and then it just goes up. So if you look at Foot Locker, You need to chase the momentum above 48.13, hold it on for as long as it goes up and then take your profit. That's not a healthy strategy for me. I mean, for this guy, it works at the moment because all shares just go up. So let's hold on. If you want to chase it, you can chase it. And if it carries on, it can take it all the way up to 54.67. But I mean, for the medium to a long term, this weekly chart actually looks nice. Let's have a look at the gold price. And very interesting, there's a big debate going on where people say that gold has lost its, you can always say, its status as a reserve currency, or when you're nervous about the market, you go to gold. It lost it completely because the only thing you can buy now, and I hope I've got time, I would love to look at Bitcoin as well. But if we look at gold here, let's have a look here. I mean, gold had from September 2019 a beautiful rally from $1,200 to above $2,000. Now it's at $1,854. But what do we see here? Although some of the gold counters are worrying me, we're seeing this resistance line, this overhang resistance line. Gold price must get above, and there's the level, 1,880 to give it a next move to the upside. Let's look at this bottom support line. It's still in a bullish channel, so it tells you the momentum is still up. The chart still looks healthy, look at that. But this is a massive symmetrical triangle. But while the gold price remains above this line, it tells you that the momentum is up and it's a bullish chart. So only below 1,736, this level here, that area there, then the chart will start to worry. This symmetrical triangle, it keeps you busy, and only above that line, it will break to the upside. So for me personally, gold is almost in a period now where it's limbo. It doesn't give you a pure, clean way. And by the way, James asked about it. James, I think, wait for gold, wait for it to break this level there before you enter into it. And remember, there's a few options. You can buy Kruger Rands, you can buy new gold on the local stock exchange, or you can maybe buy a pure gold play on the overseas platforms. Well, let's have a look at Pinterest. I mean, that's now one of those favorites of the world again. Everybody loves it. Look at this chart. Now, this is now typical of the era that we are in. Everything is just honky-dory, nothing wrong. And look at this chart. I mean, from a low of $12, 23 March, it went to 71. Can you believe it? You can almost say, just went all the way, and it's close on its way to go to 75, and everybody just say, you just buy Pinterest. Now, as we know, Pinterest is a wonderful platform, nothing wrong with that, but look at this Lampel formation. It went up, it pushed up, and usually after a Lampel formation like this, you will see sort of a V reversal to the downside, a waterfall formation, give you a nice pullback. This share does not even do that. It just goes even higher. So if we look at this chart, it's a momentum play. It's now that typical chart where that guy said he just waits for the share to pick up, and it will probably, if it goes above 72.50, it will push even higher. There's a tiny little inverse head and shoulder there. Let's have a look here. You can just see there. There you are. There's a tiny little inverse head and shoulder. And if it breaks above that 72.53, where can it go to? Can you believe it? It can then go to, I'll zoom out now. It can maybe go all the way to 74. Let's just have a look here. There's the inverse head and shoulder. There's the neckline. Let's give you guys the neckline if you chase the momentum. Above 70 to 10, and then it can chase all the way up to 74.80. Nothing wrong with this chart. Everything go up. Let's have a look at Bitcoin. I mean, in actual fact, I see a lot of people say everybody's talking about the markets that did so well in 2020 and the markets recovered, but Bitcoin was the star performer, and everybody is quite right. I mean, I've seen it in December. I was actually surprised when I saw the chart. Somebody asked me, and Keith, he said to me, Frans, just have a look at this chart. Now, can you believe it? That was the overhang. In 2018, it went as high as almost $19,300. What happened let's call it a few weeks back? It went to $19,000 in, let's say, the first week or the second week of December, and it rallied from 19,000 all the way up to $39,000. And on some platforms, I saw it went to $42,000 plus, north of 42,000. So it just shows you the momentum. Well, guys, I don't have any Bitcoins. I don't invest in Bitcoin, and maybe I'm stupid. It sounds like I'm stupid because I miss out on this rally, and I believe the market wants to come back, and I don't invest in Bitcoin. If I look at this market, rally all the way to the top, it looks like it's a little bit of a V reversal here to the downside to give us what we call a beautiful sell-off, like a waterfall formation. But where's the clue here? The clue is while we're above this little line there, that's support. While we're above 33,730, everybody can talk about it, everybody can scream, then the momentum is still up. And above this level of, let's call it $40,000 and 100, it can actually push even higher. We live in periods of time now that people just ignore all risk. The word of risk it has no meaning. It is just the people that's got money, they come in, they buy the market, or they buy the instrument, they rally away with it, and they chase it as high as they can, and everybody that's not on that boat, and I'm one of those, is just sitting on the sidelines and wait for a proper pullback. That's the bottom line of this market. When you're in the market and you enjoy the rally, enjoy it. When you're out the market and you've missed the rally, wait for a correction. And that is the moral of the story. The shares rallied beautifully. All markets looks healthy. Just be careful, it rallied way too hard. While the music is on, everybody will be happy. Well, visit our website, www.fransklerk.com, and we will chat again.